Let me start with where a USDA loan can be beneficial. So, number one, rural locations. Not every lender wants to lend in rural America. Construction. Many lenders avoid construction. Larger projects. So, you put those three things together, that's already a challenge. And oh, by the way, startups, expansions, and projected based transactions. So, I mean, you just kicked out 90% of the conventional lenders at the very
And
least.
can we even just time out and say, why do conventionals not like those first things? Why do they not like construction? Why do they not like those?
Each one has its own element of risks. The challenge with lending on a project in rural America is the go dark value or the liquidation value may be much less because there's just a much smaller pool of eligible buyers. So that's the first thing. Construction has its own risk metric. You have cost overruns, you have contractor failures, you have the business maybe encountering some sort of financial difficulty during construction versus just, I'm financing a purchase or a refinance. So that's another reason. And then the larger loan amounts, what ends up happening is the local and regional banks are okay with those risk metrics, especially if they're in those markets. But when you start talking about $50 million projects, you exceed the balance sheet capacity of a regional bank. And that's where USDA could then be an optimal solution. So those are the main ones. The ability to lend on projected income is a big one, plus the other three that I mentioned.